Hello, everybody. How's my favorite accounting one class doing? Here we are, week 4, but we're still learning accounting. How cool is that? So we're still in chapter 19, going slowly through this chapter. I hope you're okay with that. I'm sure you are. So we're going to be taking a look at 19.4, and that's disposing of a plant asset. And we're going to take a look at a few things, a few calculations, journaling that needs to be done when we have an asset and we decide to get rid of it. So getting rid of something means to actually, that's kind of a loose term, but it's either you're trading it in for something new and you're getting cash for it, you're disposing of it, either with or without whether it has salvage value or not, and that'll be taken into account. So disposing means like throwing away or recycling. Trading in um, means that you are going to give it to someone and they're going to give you something else at a reduced price, or you're just going to plain old sell it, right? And just get cash for it, either at a loss or a gain. So we're going to be taking a look at a lot of those issues, not all of them, but all those situations that may happen. Okay, so here's kind of the guidelines for taking into account of the disposable of an asset. So you're going to update the plant asset record. If we were doing that, we were in that sheet in 19.3. So we are going to go back into 19.3 in just a moment. We're going to be hitting that up, but then most of our work is going to be done in 19.4. We're going to update the cash receipts journal because we're going to be receiving cash for these old assets that we're getting rid of in some form or fashion. And then we're going to be updating a general journal to record that partial year's depreciation because we disposed of an asset. Okay. So the next slide, there's only 2 slides with this, but they're pretty powerful. I like them a lot. I'm going to make this bigger once it loads. Okay. So these are just some things to keep in mind. So when we deal with accumulated depreciation, we are going to be debiting the accumulated depreciation, okay? And you'll see why in a minute, but that's always going to be a debit to record that depreciation. The plant asset is going to be credited because we're actually taking it off the books. So it was a debit, now it's a credit. Cash, we're going to be debiting because we're getting cash, right? For selling or getting rid of the asset. And move this little guy. Okay. And I think I'm frozen on here. So there we go. I was frozen for a while. Okay. So let me go back. Sorry, I was frozen. All right. So if you get rid of an asset for more than its book value, the green over here tells you that you're going to have a debit for accumulated depreciation, always, okay? You're going to credit the plant asset, always. You're going to debit cash, always, right? But you actually are going to have a gain on the plant asset as a credit because that's considered income, right? And income has a credit normal balance, its owner's equity, and that's going to increase it. And once again, I'm frozen. Oh, there we go. All right. So if we dispose of a plant asset for less than book value, we're going to debit accumulated depreciation. We are going to credit the plant asset because we're still taking it off the books. We are going to debit cash because cash is coming in, even though it's not as much as we think it might be. And then we're going to take a debit on a loss because that is the opposite of income, right? It's decreasing our income flow. We actually lost money on the books. So that's going to be a debit. So a loss on a plant asset is a debit. Okay. So we're going to get out of here and we're going to jump right into our sheet. So just as a review, this is what we did last time. And you might have done this even just yesterday, possibly, depending where you are in your learning. So what we did, just to review, is we calculated depreciation for a certain number of years that the book instructed us to do. And now we're going to be actually using this information that we did and that we calculated, and we're going to be using it in 19.4, getting rid of plant assets. So I've actually put the problem over here. I don't think you have it. I think I did it after I delivered this information to you, but it's right over here. So I'll refer to it. But you won't need your book at this point. You can have it out if you want, but you don't need it. Okay, so the first thing we're going to do, according to the text, right, is we receive cash for the sale of our display case. So that is referring to the display case over here, right here, display case. Okay. So the first thing we're going to do is we're going to be in 19.3, and we're going to show that we sold it. So let's highlight this yellow. Okay, we sold it, and our disposal amount, we sold it for $3,000. Right? And that's all we need to do over here for now. We're going to go back to 19.4, and we are going to start right here in the cash receipts journal. All right, we know that this transaction occurred on January 5th. And what else do we know? We know that we got cash. We have a special column, cash debit, and we're going to put $3,000 in. Okay. And we also know from our slide that accumulated depreciation has a debit balance, normal balance. So we're going to go over here, and we're going to put accumulated depreciation because we know what that amount is because you calculated it. And my dog is going to be barking in a minute. And we're going to name that accumulated depreciation store equipment. Okay. So we know it's a debit. We're going to cell reference. So let's put an equal sign here. We'll go over to 19.3, and we'll go to the display case, and we have already calculated accumulated depreciation from the time of selling. Okay, so 19.3 was actually setting us up for 19.4. So we're going to cell reference the 1440 and hit enter, and that's going to pop right in there. So we've got two amounts that we are well aware of. We have another amount that we're aware of too, and we haven't really talked about it, but we're going to talk about it now. All right. It's called store equipment, right? Because that is exactly what we're getting rid of. So we are essentially taking this off the books. All right. And when we take an asset off the books, we don't put it in the normal balance, we put it in the credit balance, because when we buy it, it goes into the debit balance because it's an asset. When we get rid of it, it becomes a credit. So we're going to cell reference, once again, equals, and we'll come over here, and we've got the original cost of $14.40. So we're going to cell reference that. There we go. All right. So what do we know? We know that, I'm going to go back here. We know that the ending book value of this asset at the time of selling it is $2,600. We also know that we got $3,000 for this thing. Okay, so on the books it's worth $2,600. We got $3,000. So on the books we made money. All right, so we have to reflect that in our income statement. So our work here will help build that income statement. All right, so because we sold it for more, this is going to be, this account title is going to be a gain on plant assets. All right, and I'm just going to go in here and, and because I'm in Google Sheets, I'm going to essentially tab over, okay, because these are going to be a credit. So we're going to create a formula here. And how we're going to do that is we know that our debits are more than our credits because we got more money than we thought we were going to get on the debit side. So we're going to add up our debits, the 1440, which took out depreciation, or actually indicated the amount of depreciation that was incurred. We're going to add up the cash with that, and we're going to subtract out the original value that we paid for it. And we've got a credit or a gain on plant assets of $400. Okay, and this will go as this will be reflected as revenue. All right, which is correct because it's in the credit column and it's an owner's equity account. All right, so let's go to our next one. Our next one, we're going to put the date in, but we're going to go back over to 19.3. Our next transaction is it says we received cash for sale of a workstation, right? So, and let's see how much it is. There we go, $2,000. All right, $2,000 we got for the plant for the station, and it's on August 10th. All right, so let's go back over to 19.3, and we'll take a look at what happened with our workstation. All right, so you guys remember calculating the annual depreciation expense for a partial year. So I just want to go through how this was set up for us very nicely. So in problem 19.4, it says we sold it in August, right? So we're going to redo this formula as if we knew it was going to sell in August. Okay, so this is like real time here. So the formula is right up here, and it's going to be equals, I'll just do it for you, equals B19, which is the original cost, and I'm going to put a parentheses around this. B19, there is no salvage value, so we don't really have to put a minus here because the salvage value is 0, okay? So we're going to take that B19 and we're going to divide it by estimated years of useful life. In fact, I will cell reference it. We're going to close that out, and this is interesting, we're going to multiply it by the number of months that we owned this asset, okay? So here's the key. This asset was sold on August 10th. That means that we are not taking depreciation for the month of August. We're only going to take depreciation through July. If we sold this asset on August 16th or 17th, 18th, 25th, we would take the full depreciation for August, and that would be 8 months. But we are not. We're only taking through July, so it's going to be, since July is our 7th month in our year, we're going to multiply it by 7 divided by 12. So that will give us a partial year, and that's how we got the 560. Okay. And that was exactly 4 years. All right. And the fact that we're getting rid of this thing before the estimated useful life of 5 years means that we're going to have to do something in the general journal later as well. All right. So let's go back to our cash receipts journal and let's put in the information we know. We know we got $2,000. We could cell reference that, but I'm not going to. We're just going to type in $2,000. Right, and we also know that accumulated depreciation is going to be debited. So I'm going to put that in there, but I'm going to change out the account to office equipment. All right, and we know $2,000. Let's go back here just for a second. You don't have to do anything. You can just watch. We're getting $2,000 for this. So we did sell it. I'm going to go back here. We're going to do this. it was sold. Disposal amount is $2,000. And we know that it has when we sold it, it actually had an ending book value of $2,080. So that tells me that we've got a loss here, right? And mental math will tell you that we lost $80. So our journal entries are going to look a little different than they did for our last asset. So we know we got $2,000. We know that we have accumulated depreciation. So we're going to cell reference that. Go back, equal sign in the debit for accumulated depreciation, and it's going to be $2,720. You can just click in there, enter it. There we go. And another thing we know is what we paid for this asset. However, this is going to be a loss, so we know we're going to have a debit, which is the contra account to income, right? So this is not going to be a credit. We know that we're going to have a debit here. So I'm going to skip a line because we're taking this asset off the books. This workstation is no longer owned by us. We're taking it off the books. We're going to cell reference the amount we paid for it, $4,800. All right. So and then we can put the name of this account here, office equipment. Well, and we can shift it over. We know we're going to have a debit, and this debit is going to be called loss on plant assets. Remember, when we have a loss, when there's a negative number, with journaling, we never put negative numbers, right? And we never even, parentheses, negative sign, that never happens. It's either a debit or credit. You guys know that by now. All right, so how we're going to calculate this is we're going to put our cursor in this cell. We're going to create a formula, and it's going to be the credits minus the debits because we've got a deficit here, and we've got to fill that. So it's going to be the 4,800 minus the 2,720 minus the $2,000. And we show that we have an $80 loss. Okay, so these are opposite situations. Here we sold our asset for a gain according to the value on the books at the time of sale, and this one we show a loss. So that's why we keep track of that, because we have to be transparent on what we're doing. We have to show how we're gaining income, and this is income not from sales, right? So this is non-sale income. It's income from other sources like interest. Okay, so the last thing we're going to do is pretty simple. August 10th, we actually got rid of an asset during the year before accumulated depreciation was taken into account. So we have to journalize that so we're ready to show expenses at the end of the year. So we're going to do that in the general journal, August 10th. And the account title is going to be something that increases, which is depreciation expense. Right, and I'm actually going to change the alignment here over to the left. Okay, depreciation expense. And then our second account title is going to be accumulated depreciation. So we're taking out this partial amount, so it's accounted for. So we're ready for the end of this fiscal year. Did I not spell this right? Accumulated depreciation, there we go. And this is the amount that was accumulated during this year of August 10th, the fourth year, so 2004. I think we've been using that. So we have to expense that, and we'll never expense depreciation on this asset ever again because we don't own it anymore. So we're going to cell reference, and we're going to go down here, and the annual depreciation for the year 2004 is $560. Okay, the accumulated depreciation, we're taking it out, decreasing it 500. We're all set. We finished 19.4. We've got 19.5, 19.6. This is the chapter that never ends. So I hope you enjoyed it. I really wish I was in the classroom teaching this, but this is okay too, silver linings, right? All right, so I will be talking to you soon, I hope. Enjoy your day, enjoy your weekend. Looks like the weather's going to be a little better. It's beautiful out right now. So I will talk to you all soon. Take care.